we did have a breakout to an all-time high recently, but it was only a daily breakout. And then the gold price came right back down into that 3-month consolidation. So it's building a stronger base here. Gold bounced off its rising 18-week moving average. Has been pretty strong support for the past year or so.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, what's going on with the price of gold? Silver's under $30. Is that a huge bargain? Is it going up to $300 like Eric Sprott predicts? Well, let's find out with David Erfle, Jr., Miter, Junkie with a Y.com. And if you've got a question for David, myself, email kl@kerrylutz.com. David, how are you doing there, man?
Great, Kerry. How are you? Always nice to see you.
Always. So, gold, we haven't been able to break 2,500 yet, so we're getting closer. Not quite there. Every time it gets close, something seems to happen.
Yeah. Well, since we had that monumental breakout of that 13-year cup and handle pattern above 2,100 back in March, gold's been making higher highs and higher lows. You know, we had a $450 move in the space of about 9 weeks. And that move's been consolidating for about 3 months now, but it's making higher highs and higher lows in that consolidation. We did have a breakout to an all-time high recently, but it was only a daily breakout. And then the gold price came right back down into that 3-month consolidation. So it's building a stronger base here. Gold bounced off its rising 18-week moving average. Has been pretty strong support for the past year or so. So it came down to test that, which at the time was around 2,300. And silver has just tested its 18-week moving average here this past week. I think it was this week. And it's trying to stay in its consolidation as well. So, you know, it's all good as far as the metals are concerned. I mean, they're in a bull market. They're making higher highs and higher lows.
So, question is, do we go buy silver now? Is it worth doing it? Do we miss the run? What do you think?
Well, you know, silver's got a long way to go as far as catching up to the gold price. You know, the inflation-adjusted gold, CPI inflation-adjusted gold price is around 26.90, something like that, which you know, we're not too far away from that. And that's from 1980. But when the Hunt brothers tried to corner the silver market in 1980, the silver price got up to $50, and the inflation-adjusted price for silver, CPI inflation-adjusted price for silver, is around $150, $160. So silver is still massively undervalued in relation to the gold price, and as well as the gold stocks. You see, you know, the gold mining sector and silver both have been underperforming gold for quite some time.
So where do you get more leverage, with the stocks or with silver? Because I mean, if it's going to go up to 150, that's a 5-bagger. If it goes up that high, what do the stocks do? Are they 100, 500 baggers?
Yeah, well, I mean, you said your question was you go with silver or the stocks. How about silver stocks? But there's really not that many that I think are worth investing in. You got to get a hold of a basket of the right ones, and all it's going to take is just one or two of them to fly, and you're going to do really well. I mean, this is what happened with me, fortunately, back in the 2008 to 2011 run up. I got into a couple of silver stocks. At the time, they were relatively unknown. One was First Majestic Silver, sure. And the other one, yeah, and the other one at the time was Wheaton. Wheaton, silver, called Silver Wheaton then, and I got into those really heavy. And, you know, they were multiple, 10, 15, 20 baggers for me.
Yeah. Hey, you know where I really cleaned up on First Majestic? They had listed warrants back then. And I loaded up on that. I mean, I didn't put enough money in it, unfortunately, but it was like a 12-bagger in like 2 weeks.
Yeah. Yeah.
Like timing there.
Yeah. Warrants. You got to get the timing on those, and you could do really well.
Yeah. So, But now there aren't, like you said, there's not many silver pure plays that you want to touch, right?
Yeah, absolutely. You got to really do your homework and get into the right ones at the right time, and then be very patient.
And with what's going on in the world, it seems to me like we're looking all over the world for this stuff, but the jurisdictional risk is increasing by the day, right?
It is. And then you have these top tier jurisdictions also in North America where, they're fabulous jurisdictions to operate in. But as far as getting your project permitted, that could take a really long time. So for instance, in Canada and in the US, it might take, 7, 8, 9 years to finally get your project permitted. Once you get close to the feasibility stage, then you got to wait several more years to get it permitted. But on the flip side of that, you've got some of these West African countries where the governments own, a portion of the mine, and they want to get you permitted quickly. So, you could go from discovery to construction within 3 or 4 years in some of these West African countries.
That's like the only place really in the world where you can do that, right?
Absolutely, yeah. But but then you've got to deal with the West African risk as well.
Yeah. So you got to governments come and go, like forget it, right?
Yeah, I mean, there's in a place like Burkina Faso where there's there's a coup every couple of months. But as far as the country's concerned, these mines get permitted quickly. A lot of gold mines have been built in Burkina Faso in the past 20 years, and their discoveries are made, and then permits are given quickly, and the mine is constructed. And the company does really well, but still not as well as a top tier jurisdiction, because investors see that it's West Africa and they feel, okay, this is a risky place to do business, even though the mine is doing well, the company's doing well. You've got a discount on the share price,
and of course you got productivity issues once you get outside of the so-called top tier jurisdictions, right?
Right. Exactly. Yeah.
Wild.
Yeah. I mean, it's funny because, during the last major bull market in the mining sector from 2001 to 2011, especially toward the end there, permitting really wasn't an issue. Investors, they were just clamoring for more ounces. They were telling the majors that they were owning, hey, we need more ounces. Gold's flying.
Yeah.
We don't care. We need it at any price. So they invested in, these low grade bulk tonnage projects just to get ounces on their books. And permitting wasn't even an issue. Nobody even looked at that.
Hey, so when we last spoke, we talked about a little company, probably remember, called Newmont.
Yes.
And Newmont at the time, I believe, was 41 or 2. It's now hit 48, and that's anticipating blockbuster earnings coming up. I was planning to buy options, but in the account where I wanted to buy them, I didn't have options authorization, so didn't. But I knew it was going to happen because we said they're doing like a couple million ounces a quarter, and you multiply that times 300-400, David.
Right,
that's huge. That's like
right.
And they had already written everything off. They were smart. Like a year, 2 years ago, they said, we're getting rid of all this stuff. They wrote off everything but the kitchen sink. They took their hit because they knew this was coming, right? Smart people.
Right. Yeah, absolutely. I mean, and now they're basically in a league by themselves after they gobbled up Newcrest. And they're producing nearly twice as much as the number 2 gold miner, which is now Agnico Eagle. Eric keeps getting lower and lower as they're not jumping on the M&A bandwagon. But as far as Newmont is concerned, it's interesting you bring them up because they're going to be kicking off Q2 earnings season after the bell today here on Wednesday.
Right.
And I expect their profits to be record-breaking monster profits, because if you take a look at what happened with them in Q1. They had blowout profits, and the stock went up 12.5% the day they announced earnings, and it was by far the largest gainer on the S&P 500. And by the way, Newmont is the only gold miner on the S&P 500. And we're going to have these their Q2 announcement after the bell today, like I said, and the gold price back then averaged around 2070 to 2090 an ounce back in Q1, and in Q2 the gold price averaged $250 higher, and the oil price, which is probably about 50 to 60% of Newmont's cost, because they have these huge open pit diesel guzzling gold mines, right? And the oil price went down $16 during Q2. So their costs are probably going to be either flat or a little lower, while the gold price went up $250. So I expect Newmont is probably going to be announcing another monster quarter, and nobody's really paying attention as far as the street's concerned. You take a look at the volume in GDX and GDXJ ever since gold hit another all-time high here a couple weeks ago. The volume has been decreasing down lower and lower as everybody's still concentrating on the stock market, right? So nobody's really expecting what Newmont is about to announce, I think. And if they come out with another blowout quarter, that's back-to-back quarters.
Well, they're going.
And these fund managers and big money traders, they no longer can ignore this sector. They've been ignoring the gold mining sector for the past decade. I mean, 2013, 2012, 2013, when the gold price lost $1,500 an ounce, that's when the bottom fell out of the mining sector, and the generalist investor left in mass, and they've yet to return. And the evidence of that is just looking at the volume of GDX and GDXJ. It just keeps getting lower and lower and lower. And the old adage, never short a dull market, comes to mind. We've got the stock market is rolling over, and the gold stocks are going higher. They're starting to decouple. That's not a trend. This is just day one. I don't know if that's going to continue, but I know the Magnificent Seven stocks lost about 1.3 trillion in value in 1 week recently. They went to a total market cap of 17 trillion down to 15 trillion recently here. So I think you're going to start to see some sector rotation coming into the gold mining stocks, especially if you see back-to-back blowout quarters from these miners.
Yeah, well, look, Newmont was an easy one. And the best thing was, even in Q1, they had some write-offs there that kind of artificially depressed.
Right. And they announced divesting. By divesting some non-core assets, they're going to pay off some debt. So their balance sheet is getting stronger and stronger. And that's happening with a lot of these gold companies, right? I mean, that was the thing, right? Back during the last bull market, their balance sheets were crap. And they took on all these projects that needed higher gold prices, and they did it with stock. So it kind of ruined the industry for a decade. But now they've come back strong, and they've got really strong balance sheets. They're paying dividends. I mean, back when I got into this sector 20 years ago, it was unheard of that a miner paid a dividend.
Definitely.
So they're paying dividends. They're doing stock buybacks. Their balance sheets are healthy. Now they got to start concentrating on growth. So that's where the juniors come in.
Because the reserves are declining. We know
exactly
the resources are declining, and they got to be looking for new discoveries. And that's where the high quality, not an oxymoron, juniors come in. And, there's about 10% of them out there that have something. But, I've been in the business long enough, like you. I was looking at a list of companies from, I think it was back in 2011, or maybe it was 2013, at one of the conferences. And you know what I discovered? There were some old dogs that just never die. But most of those companies, I don't know if they've been rebranded. They didn't exist anymore, David.
They've been gobbled up, or they've gone under. Yeah. I mean, the turnover is could be large. There's a lot of lifestyle companies in the junior sector. I mean, I'm with Rick Rule. It's that 85% of them are uninvestable. So, really got to sharpen your pencil and do your due diligence and make sure you're getting into the right ones, because you want to make sure to accumulate a basket of them, because like I said before, you're going to have some dogs. It's going to happen.
Yeah.
It's like a hitter in baseball, right? You're in the Hall of Fame if you go 20 years and you have a batting average over 300. Well, it's the same thing in picking junior stocks. If you get 3 out of 10, you're doing well.
Hey, like anything. So, hey, all right. That's obviously why people need to subscribe to Junior Miner Junkie, and just tell us what you do. And just let me state up front, what I like best is when you give a buy reco or a sell, you wait before you execute your own trade to let your subscribers get in, which is the utmost of integrity in an area where it's sometimes lacking.
Absolutely. Yeah. When I started my newsletter back in April of 2017, it doesn't seem like it was that long ago, but I wanted to make sure that I was completely transparent, and that basically, I'm whatever I invest, whatever I'm recommending others invest in, that I'm going to invest in also, and I want to give them the opportunity to get in at the same time I do. So what I do is, if I'm about to purchase a position in a junior, I'll do a detailed company report on the stock, and I'll send it out to my subscribers the day before I plan on beginning to accumulate the stock, so we could kind of all try to get in it together and hold it for a period of time to where it's going to make us at least 3 to 10 times our money. I won't touch a junior unless I see at least 3 times upside potential in the stock. So basically, it's a completely transparent service. I let everybody know what my trades are, what I buy, what I sell, how much I made, how much I lost. And it's done really well. I got a great subscriber base, and I work very hard. The newsletter comes out every week. It's a weekly newsletter, and even if I'm on vacation, it's a scaled down one, but I still put out a weekly newsletters because I love my job, and I love helping people make money in the sector.
Right. All right. So got a question for David or myself. Shoot me an email, kate@kerrylutz.com. The link to juniorminerjunkie.com is in the show notes of this interview on financialsurvivalnetwork.com. While you're there, sign up for your free newsletter. David, it's going to be interesting, and it'll be interesting to see how long this ride lasts.
Absolutely. Yeah, I think the second half of the year is going to do really well for investors in the junior sector.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.